You are listening to chartingwealth.com for Tuesday, the 24th of July, 2018. As we look at the markets today, we see stocks are up, gold and bonds are down. Let's jump into this weekly chart and see how things are looking on the S&P 500. We see, of course, we've started the week off with an up move, but as we really focus in on what's going on the weekly, looks like so far we're just topping off where we were over the course of the past week. Now, again, the S&P up for the day, 0.19. This is just the first day of a week-long candle, so it's the first day of a 5-day candle. We see the derivative oscillator gaining some momentum. Price percent oscillators heading up since we sort of bounced off the red signal line back on that week ending the 6th of July. Past 2 weeks, we do see nice up movement as we go from the weekly to the 2-day. What we see is really a pairing off as we are looking at the 2-day after how many days of prior up movement? 1, 2, 3, 4, 5, actually 6. So that's 12 days of movement. We see that the latest candle that has been forming is actually a red spinning top. Now that represents the movement on both Friday and Monday, and that is an open box red spinning top. So again, nothing like yet a red, solid red down candle, but it does show us as it's blown through the weekly trend line, and I'm sorry, the 2-day trend line and all that up movement. We do see that it's giving us a pause for some concern as far as price movement goes. Price percent oscillator not heading up at quite the same angle it has been. Derivative oscillator still gaining momentum, but both of them are moving up. That's something to pay attention to as we start off the week. And of course, the 4-hour chart, really we just see a sideways slip. We saw some down movement in the morning, a little up in the afternoon. It is hopefully nothing but a pullback. And if indeed we do see that 2-day chart continue moving up along with the weekly, this 4-hour chart rotate back over and start going up at some point. That, of course, would give us a potential jumping in point as long as this down move's not too long and too strong. So we'll continue to watch the S&P and see if this week gives us an opportunity to jump into an up move. How much similar to the S&P is the NASDAQ 100? Well, starting the week off looking somewhat similar with a red open box candle having moved through the 2-day trend line. We see that the price percent oscillator is almost flat. Derivative oscillator appears to be losing some momentum heading up. As we go from the weekly to the 2-day, what we see here is again that similar red spinning top means indecision tending down. It's pushed through the 2-day trend line. Derivative oscillator still gaining upward momentum. Price percent oscillator still ticking up. And as we go from the 2-day to the 4-hour, what do we see going on there? Well, again, sideways slide, some real down movement in the morning, a bit of a recovery in the afternoon. Price percent oscillator still heading down. Derivative oscillator looks like it's flat. Yeah, pretty much flat. So maybe we'll be seeing a turnaround in that if indeed, again, just like with the S&P, if we see the Qs rotate over going up, that is a very good sign for us to jump in and ride that up move. But that has not happened yet. Hopefully that will. Okay, we're now going to go from the QQQ, that's the stocks. We're going to go to bonds. We see bonds really down for the day, 1.23%. We have a strong red down candle forming. Derivative oscillator losing momentum. Price percent oscillator heading down. And again, that's a big down start to the week after we had a red spinning top showing indecision tending down. That's the way the last week ended, but really a strong down move. Of course, we've blown through both the 2-day and the weekly trend lines. We go to the 2-day chart. What do we see? Well, of course, we see that this latest 2-day candle has blown through the weekly. It had already moved through the 2-day, crossed over going down. So we'll just wait and see if that's going to be enough strong movement to pull bonds over heading down. But the week starting off, pretty strong down signal. As we look at the 4-hour chart, what do we see? Of course, we've got 2 days of really, really heavy down movement. Derivative oscillator slamming down, price percent oscillator heading down. So Maybe there'll be a change coming up soon in bonds. Hasn't happened yet. We'll continue to keep our eye on things. Lastly, we go from bonds to gold. Gold, of course, has been in strong down moves since it really rotated back over, going down on the 27th of April. And but for 3 up weeks since then, it's continued to move down quite strongly, starting the week off again down about 0.5% for gold. We have a red down candle forming, derivative oscillator gaining momentum, price percent oscillator still heading down. And if we go to the 2-day chart, what do we see there? Well, again, price movement is below the 2-day trend line. We do see so far on that 2-day chart, well, what we have is, again, price movement below the weekly and the 2-day. But we do see that we've got a green up candle, solid green up candle. Price percent oscillator is still heading down. Derivative oscillator still gaining downward momentum. So keep your eye on gold. Still in a confirmed down move on both the weekly and the 2-day. What do we see on that 4-hour chart? Well, it had been heading down quite nicely since it crossed over, going down back on the 13th in the morning, and then sort of bottomed out around the 19th in the morning, headed up. And again, we see started to head over, rotating down again, just as though there was enough up movement in those prior candles from the afternoon of the 19th and through the 20th to really give the oscillator power to keep moving up. But with those down movements for the day, we'll wait and see if things cross back over, going down on that 4-hour chart. That would give us a jumping in point for continued down movement in gold. So keep your eyes on gold, potentially moving down if that 4-hour chart crosses back over, going down. Keep your eyes on the S&P 500 and the Qs if indeed they continue their up movement and those pullbacks end on the 4-hour charts and give you a jumping in point there. So that is where we are, folks, as we end the day on Monday, go into Tuesday, the 24th of July. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.